Welcome to the Bob Unger Show. My guest is Kevin Duffy. He's been a money manager for roughly 40 years with a lot of experience, having gone down and up with the markets in this country, which now doesn't have a market anymore, in my view. And through the great financial crisis and into what Jim Rickards in his new book calls the New Great Depression. And that's just my editorial comment. And he also publishes, he's the editor of an investing newsletter called the Coffee Can Portfolio. And I assume, Kevin, that moniker is a metaphor for something. So what is it a metaphor for?
Yes, the coffee can idea is, it harkens back to the Old West. And the idea was that you would take your valuables and you'd put it into a coffee can and hide it under your bed. And so if you had to leave rapidly, you could just pick up your most precious belongings and in the coffee can. Now, the idea is that you're very selective in terms of what you put into that your investment portfolio, and that you basically hold it for a long period of time.
I got it. Now, all of us who get involved in investing have winners and losers. We make a lot of mistakes and we do a lot of things right. Certainly, I have mistakes in doing things right. What would you say is your biggest victory in terms of what you did right? And what would you call your biggest defeat in terms of what you've learned from doing things wrong, which unfortunately we learn the most that way?
Oh, it's a good point, and probably a fairly long response. So I'm going to go back to kind of my early days in this business, which would have been in the I got in 1985, and we went through the late 1980s. First of all, you had the 1987 crash, and then you had this big bubble in Japan. Probably, I'm going to, start with that recognizing that there was this massive bubble in Japan. That was a great lesson. And on the flip side of that was that there was this anti-bubble in U.S. technology. So there was this belief that Japan had this happened. And so, of course, a lot of progressives kind of jumped on the bandwagon, and they extrapolated this. So what I looked at was this as a contrarian. I thought, okay, Japan is not all it's cracked up to be. We want to look closer at this narrative, this simple narrative that we're all going to be pushing brooms for the Japanese by the end of the century. And the flip side of that was that the U.S. was very competitive. And so that was a good call, a great call, and really served us well with my first firm in terms of investing in technology stocks like Dell Computer. These stocks really had incredible runs during the 1990s. That was set up by really this bubble and the anti-bubble. As far as the mistakes, we could talk a lot longer about the mistakes, and I think you learn more from that. I'm going to say I have a lot of mistakes. It's kind of hard to think which one is the biggest one, but we've only got so much time, so let's pick one. And I'm going to say the biggest mistake was after the credit bubble. We had shorted the credit bubble. We did well. We got a little bit of notoriety from that. And we basically stayed at the table too long. We kind of got fixated on our own dogma. We fought the Fed. we put all of our eggs into one basket, and we refused to admit. It was kind of like standing in front of an oncoming freight train and saying, you know, it's going to stop at this point. And what happened was they rolled out ZIRP, zero interest rate policy, that lasted for a decade. And so I think there were a lot of lessons that I learned from that experience, which are, you know, don't fall into the dogma trap, that there are positive things going on as well as negative things, and that you know, you have to adopt a certain level of humility in terms of what you know, and in designing a portfolio, you've got to be prepared for, you know, all scenarios. And I think the first lesson in investing is survival. Try to don't be so dogmatic and so convicted and think that you know everything. Be prepared for being wrong. I think that's the best lesson. And then the other lesson of that is try to figure out, this is a game. Investing is a game, and we have to have edges in the game. We're competing with other players. So try to figure out where you have edges and recognize, I think the number 2 rule in this game is recognizing what your advantages are, and then when you have an advantage in this game, you press that advantage. But that's not all the time, and I think it takes some understanding, knowing when to press, when you have an edge.
I had a similar conversation when I interviewed David Stockman a couple of months ago, and we both made the point that in the old days, when we actually had a market, people would use the standard metrics, PE ratios, balance sheets, earnings, profitability, all the various stuff that has been timeless through the centuries, really. And now the only thing that matters is, what did these cretins at the Federal Reserve say today? That's what everyone is focused on. So you have this unelected Politburo that is prognosticating and prophesying, and it seems it's the only thing that everyone talks about. And that's not a market. That is a communist command economy. And if you look at the Communist Manifesto, which is the Bible, if you want to know what Judaism says, you look at the Torah. If you want to know what communism is, you read Karl Marx. And Karl Marx had various platforms for communism. Every one of those platforms accomplished, including a central bank. And so with that in mind, how does one invest when you've got a countervailing force that may not be based on traditional economics or investing normalities? And how do you circumnavigate that problem?
Wow. Well, you know, it's kind of the elephant in the room. I guess we have to acknowledge its existence. We have to be careful not to be stepped on. We understand that we're also competing in this game with other people. They may or may not understand the nature of this beast, and I think that can give us an edge. You know, so I try not to get too negative about it. I don't want to be too obsessive about it, and you know, recognize that if we understand that, you know, maybe the stimulus of a couple of years ago wasn't going to work, and that other players in this game thought it was going to work. You know, they were convinced that this was going to result in the strongest economy since 1951. I think it gives us an advantage, and I try to, you know, not get so fixated on the noise, but try to figure out, you know, where the risks are, and try to, you know, if you think that the risks are that you're going to have inflation, price inflation, you try to protect yourself from that. So yeah, I think, that's what I try to do. I try not to get too down about it, because you also have to balance. I think one of the lessons I've learned in all this is to balance things, and that there are a lot of positives going on as well. Things are not all black and white. They're not all negative. And so I just try to take a more balanced view.
How do you see the current state of the economy and the stock market? And are the two related, or have they diverged from each other?
Oh, the two are absolutely related. The two are definitely related. And I think the economy, going back to a couple of years ago, we had trillions of dollars in stimulus, and it's kind of like the pig in the python. It's working its way through the economy. You could see it I follow a lot of the retailers. You could see that their results, first of all, they got locked down, and then you had all this pent up demand. You had people getting stimulus checks, and it resulted in hugely inflated earnings, and now those earnings have basically disappeared. So the economy I think we experienced a classic bubble. It peaked in the early part of 2021, and now we are basically unwinding that bubble. We're unwinding the malinvestments of the previous boom. And this is all playing out. I think right now we're kind of in the denial stage, and we've got to go through that. And we'll probably go to fear, and then eventually capitulation and despair, and that will be probably your ultimate bottom in the bear market, and be a lot of opportunities.
In terms of investing now, I assume you're mostly, if you do invest, you're mostly long. Are you shorting still, or is it overwhelmingly long?
Well, what I'm doing right now is I'm hedging. So in my fund, I use put options to basically hedge our exposure. But the thing about bubbles, financial bubbles, and this goes back to really the lesson. You could look at the Japan bubble. You could look at the technology bubble, is that you have a bubble next to an anti-bubble. And so it creates opportunities. I think this is something that a lot of investors miss. They get fixated on all the wild speculation and the excesses and the craziness and everything. And they say, I don't want to touch stocks. But if you go back to 2000, March of 2000, the NASDAQ peaked at over 5,000. Well, everybody had, or the retail investor, the crowd had piled into new economy stocks. But what they had done was they had abandoned old economy stocks. So these stocks were down. These were stocks like Church and Dwight or Procter and Gamble. They were down 40, 50, 60% in the 6-month lead up to the peak of the bubble. And as the bubble burst, as the NASDAQ bubble burst, those stocks actually rallied. And so the cheapest these old economy value stocks were of the last 20 years was at the peak of the NASDAQ bubble. So I think I look at it this way: we've got a number of bubbles going on, and what I'm doing is I'm fishing in the anti-bubbles, and I think there's a lot of opportunity on the long side.
Assuming that one is not just a jump on the bandwagon speculator. In other words, he has a longer view, let's say 10 years, which is a fairly long time these days. Most Americans have the attention span of a flea, let alone 10 years. What areas would you be hopeful about over the next 10 years?
I like, a number of areas. We could probably go into several, but I will say one is the genomic revolution. I think we're going to see over the next 10 years around the world, the over 65 age cohort is going to be the fastest growing by far. You have right now the intersection of genetics and data science. I think that's going to be a huge area to look at. There will be, let's look at active versus passive investing. Over the last 5 years, you've had a huge flow into passive investing. I call it autopilot investing. And it's driven up the S&P 500. It's driven up the big five tech stocks. And I think what's happened is the anti-bubble is not in the S&P 500, it's outside of the S&P 500. So I think active investing will do very well over the next 10 years. I think China is another area that will do well. There's a lot of pessimism about China, and I don't think the Chinese suffer. I think if you look at the Chinese culture, there's a lot to say about it, and they don't suffer from the woke culture madness that's going on in this country. The energy policies are not as toxic over there. So, but what's happening is you're getting a lot of negativity around China. I think a lot of that's for political reasons. So, those would be some areas. The underinvestment, talk about the woke energy policies, the underinvestment in fossil fuels. I think the death of fossil fuels is greatly exaggerated. They're going to have a longer life than I think investors realize. So, I think all those would be things that I would look at over the next 10 years.
I just read an article, fabulous article in the New American magazine, written by a nuclear engineer. And he goes through every possible energy source, from hydroelectric to fossil fuel to nuclear to batteries to electric to coal. He just goes one by one, solar. And the problems that he raises with these so-called alternative energies, people have no clue. I'm not a scientist, and I'm certainly not an energy technology expert. But if this engineer is correct, the panacea that they're painting is going to result in mass starvation. And he pointed out something that I thought was very interesting. I never thought of it this way. The countries that have the most fertile land have the most starvation. And if you think about it, Ukraine was considered the breadbasket of the world. But when Walter Duranty in the New York Times was talking about how prosperous Ukraine was, a reporter by the last name of Jones traveled there and found people were dead inside their houses from starvation and freezing, because being the breadbasket meant nothing when government got involved. And that's what we have here. So how do you invest knowing that you have things totally outside the marketplace that are getting involved and creating what they call, moral hazard, and subsidizing things that are not good and penalizing things that are good?
Yeah. So, there's two ways of investing. One, the popular way is to front run whatever the authorities are promoting. And, that has worked very well.
It worked well for the Fed board. They were doing it.
Yeah.
Fines.
But so, looking at whatever and this is something that's going on right now. Obviously, renewables are very popular, and front running that has worked very well. I believe that we're going into a different time. I think we're at an inflection point in government. I think government is kind of hitting a wall. It's going to have to deal with reality, and I think we're going into a very different world. So as an investor, I want to try to tune that out as much as possible. I want to just focus on the economics of things. I agree with you on fossil fuels versus alternatives. And so I think as investors, we want to be making provisions that others have not been making. And the fact that there is a scarcity of capital. The capital is not going into these much needed areas, means that we have it to ourselves. And again, we're competing with other people. I like the fact that I'm not having to compete with people who are all jumping into this business. So I think this is going to turn out very well. And we're doing mankind a favor. Europe is more advanced in these woke energy policies than we are. And they've got terms like energy poverty over there. People, and so yeah, this disconnect from reality can only go on for so long, and
Well,
let's profit from it.
the Fed and their policy of destroying demands, which is what they claim they're doing, what does that do to supply? Because after all, if you're punishing production, how about the guys that are supposed to be supplying the things that you're trying to kill the demand for? What does it do on that end of the spectrum?
Yeah, we have a clear problem on the supply side of energy. The question that I have right now is what happens with the economy. Right now, the consensus is for a soft landing or a mild recession, and I believe that we're probably headed into something that's worse than that. I think we had the mother of all bubbles, and I do believe that the markets and the economy are tied together. So as this unwinds, I think we're going to have something that is a much deeper recession. So that could crimp demand for energy and keep a lid on prices maybe for a while. But I think if you have a long-term horizon over the next 10 years, you want to be looking at that and looking for opportunities in this area in fossil fuels.
You've probably had a pretty good year this past year with your investing. Is that correct?
Yeah, I mean, it's all in the eye of the beholder, I suppose. But the coffee can last year, the coffee can portfolio, which is somewhat hedged, not a whole lot. We have bear funds that make up about 8%. We own some precious metals. We own some gold mining stocks, which actually did not do so well last year. The gold mining sector, gold held up reasonably well, but the gold mining stocks, not so much. And we were down, I think, a little less than 4% in the coffee can model portfolio. In my fund, we were up on the year, low double digits. So I'll let others judge.
That's pretty good, because the S&P for the year was what, down about 19%?
Down 18.2%, right.
I got close at least.
Yeah, you're in the ballpark.
And I can't end the interview without asking you about real estate.
How about if I answer that by saying I don't know a lot about real estate. I will say this, though. The coffee can portfolio, I try to focus on themes, on trends, on themes, and one of those themes is the migration from the progressive states and the cities to the others, also from the Northeast to the South and the Southwest. And so if I'm a real estate investor, I guess that's how I would try to position myself. And there are actually ways of doing that. We own Dillard's, which is based in Arkansas, and they own it's the old department store chain. They own 90% of their real estate, and so it really, in a sense, is a real estate play. And they've got a big presence, a big footprint in Florida, in Texas. And so there are a lot of stocks like that are actually retailers that are more like real estate plays, and they benefit from migration trends in the US.
For real estate, I go to Reventure Consulting.
Okay.
That guy is the best real estate analyst I've ever seen. He has a map of the United States, and he has algorithms on every locale in the United States. And he, at the end of the year, goes over which predictions he made and which were fulfilled. He's got a pretty damn good track record. So for real estate, I really get a lot of information from him. And the other question I wanted to ask you is, how many people do you invest for? And if any of the viewers would like to contact you for either your newsletter, which I think is a subscription newsletter, or to manage their money, how do they get a hold of you?
Well, they can get a hold of me. I've got two websites. One is thecoffeecamportfolio.com. The other one is bearingasset.com. And there's a contact section in there. They can email me. That's the best way.
I got it. Well, Kevin, thank you very much for your time. I hope that all of the information you gave out, which was plentiful, helps the listeners, because I agree with you that the so-called soft landing that everyone thinks we're going to get may require more impact than that football player from Buffalo ever received. I think you'll need a more protective gear than he had, and the results may be a lot worse, in my view. But you know, people today, they have the attitude that they're going to be ostriches with their head in the sand, and the part sticking up is where their brains are. As you know, I say what I think, and I don't put any filter on what I say whatsoever. In fact, the more woke and politically correct and cowardly people get, I get even more outspoken, because as you get older, you realize, what the hell, I'm going to be dead as soon anyway. And what am I worried about? And maybe if more people spoke out, we wouldn't have the terrible situation that we have. And I really feel sorry for the young people of today, because to support a family, particularly in places like New York or California or the most populated areas, you have to make hundreds of thousands a year. I mean, if you have kids and your wife needs to work, it costs $3,000 per kid for daycare. And now, of course, the interest rates on homes are much higher, therefore the payments are much higher. The real estate taxes are much higher. And everyone's been brainwashed that you have to own your own home as opposed to renting. And people just don't know how to think for themselves, but clearly you do. And I commend you for being a thinker. It's very rare. And I think it was George Bernard Shaw who said, I make all this money for doing something a few times a day that virtually no one does. I think.
It's a rare commodity these days, but you know, it is a competition. And I think if you do think critically and you know where the elephant is in the room and you try to avoid being stepped on, look, I can't think of a better time to be alive. There's always going to be opportunity, always. And in the madness, you know, we can complain about the madness of crowds and the insanity and all the rest of it, or we can, you know, exploit it for fun and profit, to paraphrase or quote Nassim Taleb. And so, you know, there's always a silver lining to these things. And I think